Welcome back, G-Traders. Our analysts will guide you through the crucial day on Wall Street. The US inflation data today serves as a market catalyst that could push the stock market either up or down. Wall Street was trading with a cautious optimism in the run-up to the high-impact publication. Major stock indexes perked up on Tuesday and went up in the New York pre-market today. The key stock indexes closed yesterday with a moderate growth. The Dow Jones edged up 0.26%. The Nasdaq climbed 0.98% and the S&P500 grew 0.25% to close at 4,047 points. In anticipation of the inflation data, the indexes added 1 or 1.2% on average, but market expectations were not met in full. So the S&P 500 index is expected to trade in the corridor between 3,940 and 4,880 points today. The fresh inflation data was rather positive, but not as expected. In fact, the Fed's efforts to curb soaring inflation have brought some fruit. Though the market projected more significant results, the Labor Department reported that the annual rate of US consumer inflation slowed down to 8.3% in April from 8.5% in March, the fastest rate over the last 41 years. The fly in the ointment is that the market had projected a steeper fall to 8.1%. Inflation of energy prices eased from 32% in March to 30.3% in April. On the flip side, food prices jumped by 9.4% and the highest score since April 1981. Besides, prices of houses and new cars accelerated their pace of growth. Consumer prices rose 0.3% in months, a tick higher than the expected 0.2% growth but lower than 1.2% in March, the highest level in 16 months. The market will have to analyze the fresh metrics to make a judgment, but the major Wall Street indexes took a nosedive immediately. Apparently, the Fed's efforts have not notched the anticipated results, so the regulator might resort to more aggressive monetary tightening with the next rate hike by 75 basis points. Before the publication, the probability of a 0.75% rate hike at the policy meeting in June was assessed at 73%, and now this scenario seems more realistic. Thus, the stock market might extend its decline, or investors might push stocks higher, clinging to shaky optimism. The US dollar was trading quietly at around 103.50 before the inflation data, and the US CPI gave a fresh impetus to the greenback with its index heading for 104. It's likely to hold in the corridor between 103.70 and 104.60 today. And the US dollar slipped in the light of comments by Fed officials speaking against a rate hike of 75 basis points. The inflation data today revived such hopes, and the Fed's efforts were not as efficient as expected, so the Fed will pursue its hawkish policy. The same fundamental has brought disappointment to the stock market and supported the US dollar. Besides, simmering geopolitical tensions arose a risk aversion. The USD CAD pair is trading higher today amid the broad-based strength of the greenback. The expected corridor for the pair is seen between 1.29 and 1.30. The loonie lost its momentum in light of the US CPI report. The currency pair again climbed to the levels of November 2020, it trading around 1.30 with a high volatility. Despite the greenback's strength, the loonie finds support from a rapid rally of oil prices. Having shed 9% in 2 days, oil prices gained bullish momentum and recovered by 3% on Wednesday. Brent topped the level of $106 a barrel, and WTI approached $104, and the oil market owes its rally to oil and gas jitters in Europe. Ukraine partly suspended the flow of Russian gas due to interference of the Russian armed forces. And hence, oil prices surged 6%, and the rally in the oil market encourages the uptrend in commodity currencies. While the currency and the stock markets are trying to gain a foothold, the crypto market is overwhelmed by the doom and gloom. Bitcoin is plummeting from the recent high of $40,000, and the expected corridor for the day is defined between $98,900 and $30,600. Apart from the correlation with the falling Nasdaq, the crypto market is hurt by a slump in the popular stablecoin Terra USD. It dropped to 0.47 cents on Wednesday, and crypto investors are unnerved because its fair value should be around $1. Moreover, Coinbase stocks decreased 18% in the US pre-market because the company's report fell short of expectations. The crypto exchange reported that the trade volume came in at 309 billion, 7% less than in the previous quarter and 44% less than in the final quarter of 2021. Net losses are measured at 430 million in the first quarter of 2022, much weaker than 771 million from a year ago. Such dismal news assured investors that the crypto market is a dubious alternative and not at all a shelter in turbulent times. To sum up, the US inflation data instantly set markets in motion. We could predict a further decline in stock indexes. However, the data is not appealing, so the market will have to accept it. Thus, it does not make sense to predict a sharp downturn. Trade prudently with the InstaForex and follow developments in financial markets with us. See you tomorrow.